Now this is the forecast page. The forecast is given for 19th September to 23rd September. And this is the third week of the month of September. Trending moves are expected. As I explained last week, they were expected to make the mid-month trend reversal move. They suddenly dropped Euro and GBP and also USD in order to handle the crosses. Mid-month trend reversal, they have done it in order to handle the crosses. From now on, they are expected to handle the majors, making again the contrarian move on the opposite side. So they had done the downward move in the case of Euro, GBP as well as USD, and they are expected to make the upward move in the case of Euro, GBP as well as USD in this particular week. And also you come across an important event to happen in this week, namely the FOMC interest rate decision, and what could be the reaction of the market to that. That is on 21st of September. So after that, you could come across the market is trying to get their trend for the rest of the weeks in this particular month. Now let us see the individual days forecast. These forecasts are session-wise. So each session, the expected market move is given for the 24 hours market cycle, and it is given in GMT time frame. So anybody will be able to follow that using the GMT time frame, what I just displayed it here, and it is available in predominant of the websites where they talk in terms of GMT. Otherwise, you can go to i-noindices.com and you find as well as GMT time. So local time will display along with that of GMT. So the GMT time differential with respective it takes system computer and display the GMT time. Thereby, you are able to identify what is the GMT time differential from your place, and accordingly, you can follow the market using the GMT time frame instead of the local time frame. Because if you follow the market using the GMT time frame, then if you communicate to any person who is in different parts of the world, he'll be able to understand. When I say 5 GMT, the market is expected to make a firm up move, then anybody in different parts of the world will be able to understand, okay, 5 GMT, they are expected to make an upward move. Instead, if you use our local time, my local time will be different from that of a person who is in a different place, like US. His local time will be different, or in Europe, his local time will be different, or if he is in Japan, his local time will be different. So he will be asking for what time frame. Then immediately I have to say that current time. So instead of that, if we use the GMT time frame, then it is easy for anybody to follow when you talk in terms of the universal time frame. Swing and firm up is expected during that of the Japanese session, followed by that of the European session, swing and firm up. So they will slowly gain the levels in the case of Euro and GBP, and also gain more during that of the US session. Then tomorrow they are expected to make a swing and slide Tuesday and make a small rise and then slide. And that will give that impression to that of the traders that what is gained is being lost, and they will think that for FOMC they are expected to make a big drop. But for Wednesday they are expected to make a swing and firm up and swing and rise move and pretend as if they are going to slide. Before that of the FOMC they will make the dip and then continue to make an upward move after that of the FOMC interest rate decision and the statement. Then you find on 22nd of September, Thursday, swing and slide is expected during the Japanese session, followed by that swing and rise and swing and rise in the case of Euro and JPB during that of the European and the US session. Then on Friday, they are expected to continue to make the swing and rise move during that of the Japanese and the European session, and also during that of the US session. And then you come across the following week, they are expected to continue to gain the levels, and there is a possibility that they could make the upward shift in trading zone in this particular week. So keep in mind that they created the bearish feel in the market in order to induce the traders holding long position to liquidate by testing their patience, and then subsequently they are expected to gain the levels. The players are here to act cunningly from time to time. So we should not become victim of their cunningness, and we should read the true agenda of the players by understanding the market moves. So in order to understand the market moves, we need to find out when they are making the cunning moves, when they are making their intentional move. The cunning moves, they make it in a fast way, and that will be a very quick move. So if the cunning move or the fast move or a quick move happens on the downside, understand their intention is to gain the levels. That will happen slowly. Instead, if they quickly gain the levels and hit all the stops above that of the initial high, and then understand that they want to make the slide. So always keep in mind quick moves are false moves. That means they are cheating moves. So in order to trigger the emotions of the traders, they make such quick moves, and also they make such spikes. And these sort of moves, they do it in less volume condition so that they make higher level buy and then gain the levels, but hardly they buy anything because they have a specific type of orders with which they will be able to push the market on the upside. Similarly, they can push the market on the downside, hold low and induce everybody to liquidate the long position. That's what they done it on Friday, and now they are expected to slowly gain the levels today and also in subsequent days.